Hello, ladies and gentlemen. It's a modern investing show on Pod TV. My name is Sasha Starr, and I would like to introduce our guest for today. It's Dr. Milan Somberg. Welcome to the show.
Delighted to be
Great.
here. Thank you for inviting me.
Thank you. My pleasure. And Jim Ide from Ide Foundation. Welcome to the show, Jim. Oh,
Thank
okay.
you for having me.
Yeah, nice. And hopefully we'll have Nick Paliveda
Yeah,
from
I'm here.
the network itself, which Nick founded actually himself. So now we have all our panel here. The market is slightly down today, which is unusual for Wednesday because you know that all several Wednesdays it was always up, even if Monday and Tuesday were not great deal. But we'll see how it will end up today, and at least remember what we discussed last show, and should be discussed on any show, that it's not the stock market, it's a market of stocks. So only a right selection of the right stocks, unless you are going the dummy way by buying S&P 500, then you definitely have to select the right stocks. So tell me, Jim, what are the right stocks are you looking at right now?
Well, I would say that January was great, February was bad, and March we just don't know what direction it's going. But
Obviously higher, obviously higher. Jim, look, the end of the quarter for financial institutions, it's the 31st of March. They need a window dressing to show how well their fund managers done. They want to get their quarterly bonuses. So the only way to get bonuses is to get your stocks higher and higher and higher. Otherwise, you don't get bonuses. Your superiors are not getting bonuses. Nobody get bonuses. And that's not how the Wall Street works, right?
So you're thinking that in April there'll be a sell-off?
Quite possible.
Yeah, because if you're trying to make your quarterly report look good at the end of March, which I agree with, that actually happens every quarter, then subsequently you're going to see the opposite effect. So I think that I've stayed true to my basic fundamental instincts in terms of the market and what stocks are good, and what companies are going to withstand some downside pressure, and which ones are not. And this is something that takes energy and effort to ascertain. You have to look at what's going on in the world, in the global, because it is a global economy now. And things like, for example, the semiconductor stocks I've been talking about for a long time now, I think it's a matter of national security. So I've stayed with those stocks. NVIDIA, we've talked about, Taiwan manufacturing semiconductors is another. These types of stocks, I think, are going to weather whatever storms come in individual months. And I think the upside is greater than the downside risk. So I'm staying with those types of stocks, Sasha.
Yeah, excellent. Milan, what about you? How you're handling today's environment?
On January the 3rd of 2022, the market hit its peak. That was last year, January. From there on, it proceeded to decline by about 20%. But year to date, 2023, the market is up about 5% year to date. That's how much the market has gone up. And the trend is your friend. The trend is your friend until it isn't.
Is it?
So it could continue. And, we may have seen the bottom at the end of 2022. The market seems to be trending upward. And notwithstanding what both you and James said about market has to look good at the end of March because otherwise there are no bonuses, it might continue. Might. Yeah.
For sure. Well, Nick, what's your opinion on the market and what your fancy these days?
My fancy is still the energy sector, So the thing is, and my fancy energy investment is MPLX. They pay good dividends. They always keep sending me checks, and I have to reinvest it. So some of it's bad because you got to pay taxes on it. Some of it's good because they always keep sending in checks. So, the energy sector, when we're looking at the energy sector during this purported recession, they made money. In other words, Chevron, Shell, MPLX, Enbridge,
profits.
Excuse me, what'd you say, Jim? Record
Record profits.
Right. And so the thing is, as they move the cost of energy up for those poor people in California, the dividends come flowing over here, and I'm okay with that because they like paying taxes over in California, and they like paying more in energy cost over there. So I'm playing the Texas role of reaping the benefits of the poor people from California.
Very eloquent. What can I say?
Sasha, I've got to ask this question. I've asked it before, but Powell is going to give another speech today, and I think that the markets have already factored in that it's going to be more interest rate hikes. And
Yeah.
I have a problem with the market reacting to this in general, and to the Fed reacting the way they are, because they're taking a look at trying to stop inflation, and they're looking at it as though inflation is caused by the traditional problems of an overheated economy. Well, this inflation was caused by the pandemic and scarcity. And in scarcity, we had a global breakdown of the economic distribution system, and it caused scarcity, and scarcity drives prices higher. So looking for like how many jobs we added, which is usually good news, people would interpret that as good news. He looks at it as though it's a problem and it might be inflationary, and that we have to raise interest rates. So to me, it's like solving a problem that doesn't exist. So he's got a solution that's looking for a problem that isn't there. Inflation is global. It was not just the United States, and it's not just the United States market.
Jim, what do you think is his salary?
Is it salary?
Yeah.
His salary's probably about $400,000 a year. But see, inflation, a lot of that was caused by the Trump administration. That when Biden pointed out correctly, I had to fact check this because I couldn't believe it. 25% of our debt in the United States was acquired during the Trump administration. He said that on national TV en passant, like it's meaningless. It's very meaningful. Yeah. So I was going, is this guy lying to me? Is Biden lying to me? 25%? So I went and fact checked it. You know what? 25% of our national debt was during the Trump administration. Now, that caused a lot of cash flowing out in the market, creating this inflation that we're seeing today. So a lot of that just comes from the fact that the government printing presses were just out of control. Now, why does it ripple throughout the world? Go look at world economics and you'll see the two big engines, the United States of America and China, number one, number two, huge economies. Some of these other economies are much less. So when we create inflation, unfortunately, we get the Wuhan disease of inflation. We spread it all over the world.
We export inflation.
We export inflation all over the world. You're right, Jim, because the United States is a huge economic engine. And unfortunately, a lot of it was created because of this massive amount of debt that we acquired during the Trump administration. And then Biden, of course, didn't do us any favors with his printing of massive amounts of money, sending it to Silicon Valley and sending it to
I gotta stop you there. That's not true.
I mean, Tesla, putting all the charging stations around the country.
That's cherry picking. What he did was the response to the pandemic. The stimulus checks that went out were saved poor people and middle income people from being homeless. And I think it was a necessity.
Charging stations are saving.
I didn't say charging stations. I said that's cherry picking.
Scratch my head.
Most of it,
and also providing
by the stimulus
and providing the computer chip industry billions of dollars. I'm scratching my head.
That is a national security issue.
Talk to me, Jim. How does that help homeless people? How does it help homeless people? It's corporate welfare for the ones you're investing in, which is the semiconductor industry.
No, but it's a question of national security, which is wise. Any leader of any country should do that, because we cannot be dependent on foreign sources for things that are essential for our military and for our whole computer, which is Silicon Valley for the most part. You're right, but the whole computer industry, the internet, everything relies on silicon chips. And the manufacturing of it has been mostly overseas. And so now Biden is trying to bring some of that back. But the stimulus checks that went out, which were inflationary, there's no question about it, were necessary because of the pandemic, and that people were hit so hard. They would have been homeless and it just gives them some dignity in their lives, and that was so important. So it was a good thing that Biden did it. But did it have inflationary impact? Yes.
Okay, a couple of things we need to take a look at. First of all, economic advantage motivates behavior. Who is the winner in an inflationary environment? Borrowers are the winners. And who are the biggest borrowers on the planet? The United States government. So while they keep talking about wanting to tame inflation, it's against their economic interest. Inflation in place benefits the government because they
borrow cheaper than they're paying.
They sell you $1, and they give it back to some years later. It buys less. Inflationary advantage for government is something that we can't ignore.
Well, the thing is, one problem that we've seen, and you can see on one of our other shows, Dennis Stearns, who is a friend of mine, he manages 1.8 billion. He's also a chess player. That's how I know him. Pointed out something very interesting. The next 2 years, the U.S. government's refinancing 50% of their debt at high interest rates. So the U.S. government could be in some very serious trouble with that refinancing. It's not mentioned. I noticed that Biden did not mention that in his speech. His State of the Union was great for those who saw it a couple of weeks ago.
Yes.
Really, really good, except what he didn't show and didn't say, which was really bad. Number one, Medicare goes bankrupt in the United States this decade. Number two, Social Security goes bankrupt next decade. Number three, the U.S. government has $1 trillion of debt. They're 31 trillion in debt, adding $1 trillion in debt every year. He never mentioned any of those three. And
he mentioned those first two, though, Nick. And he got the Republicans to stand in it and admit that they were not going to let them go bankrupt.
Oh, right. And what are you going to do? Print money. Okay.
Well,
I mean, when you
there's
say
no
that,
question this is a problem. This is a difficult problem to solve.
yeah, that's what I'm saying. It's easier said than done. It's easier than said than done. It's easy to say, well, I'm just not going to let the Medicare and Social Security go bankrupt. Okay.
And you can't let the government default either. It's crazy.
Yeah, you can say whatever you want. The devil is in the details. Show me how you're going to do it.
Right.
I want to tell you.
I'm waiting.
Well,
they won't hear anything because
if there's something what's happened just yesterday or half an hour ago that, oh my God, the Medicare is going out, this is going to collapse or so on, then you should probably announce it and make all the population know that this is about to happen or so on. But it's been known for years now, and nobody is able to fix it. When did you find, Nick, about that the Medicare is going out of funds? Yesterday?
Not at the State of the Union.
It wasn't the State of the Union. It's actually David Walker, who's on our show every Monday, the former Comptroller General of the United States. And since he was the former Comptroller General of the United States of America, he sits there and he said, and anyone can look it up too, the Medicare goes bankrupt this decade in the United States.
Wait a moment, but he said the same thing a month ago, 3 months ago, 5 months ago, 12 months ago, 24 months ago. What's new? You can't operate with yesterday's news and say, I'm going to remind you. Oh, you forgot probably. Let me remind you. Okay, Medicare is going out of business.
It's like a disease, and you have cancer. You're not going to die today, but you're going to die in 5 years.
But everybody will die sooner or later.
I know that,
what are you talking about? Some people will live a little bit longer if they can. Some people will not.
Unfortunately, this is going to happen during my lifetime, I believe. Medicare is going to go bankrupt during my lifetime, Jim's lifetime, and maybe everybody's here's lifetime. Social Security.
I don't know, Nick. I think you're underselling the United States of America. I think they've met every challenge so far, and I think they'll meet this challenge too.
Sure.
I have fundamental optimism in the
fundamental optimism and hope is not a plan.
Well, I agree with that too, Nick. But with the fact of the matter is that we do need to have consensus to deal with any problem. And right now we're a divided, chaotic country. And so the first thing that we need to do, and which is the hope that Biden got when he was elected, that there would be some bipartisanship, and that has not materialized. And what we need to do is get the fanatics, the extremists, out of the government. And unfortunately, Marjorie Taylor Greene was just elected pro tem, or what was she elected to? Like the vice speaker of the House. So, if you're going to put extremists like that in charge, you're not going to make any bipartisanship consensus
Jim,
kind
it's
of a
much
program and
worse.
plan.
It's much worse than you think.
It's
All Republican Party, it's a criminal party of the United States, which absolutely denied January 6th, get it out of all
Oh,
their
yeah. The
programs.
election deniers.
Well, it's unfortunate. It was a bad day for America. Period. No discussions, nothing at all. So until
But we
this
survived it.
chief and criminal Trump will be put in jail,
okay, but in the
out of
meantime,
running for president. Until that happening, we have 50% of United States of America believing in crops, believing in
I think it's 1/3 of America.
idiotic
believes
fact,
that.
absolutely, that the earth is flat and it's standing on three giant elephants. Okay, that's what we are dealing with. How you can logically talk to these lunatics. Absolutely no way. Put half of them in jail, half of them to Mexico, and then maybe there will be some normalcy.
It's the Jewish space lasers that really are the problem. So.
in the meantime, what should we invest in now that we know that the American economy is loco parentis? Milan, you're still believing the S&P 500.
I have two fancy stocks. Before Milan will explain the wisdom of investing in S&P 500, I have combined number one, the reporting, which will happen later on this March for one stock, for example, and the effect of all stocks hopefully will go higher in March due to the reporting, the quarterly reports. So one of the stock is company by the name Lululemon. The symbol is Lulu, L-U-L-U. It's Canadian company, by the way, which is doing quite well. They have unique line of products.
On International Women's Day, you should talk about Lululemon.
Yeah.
Absolutely. I don't know. We should talk more about Lulu or lemons. Which one you fancy? So this company is right now, it's forming its base. I think probably in about a few days' time, maybe a week time, maybe even tomorrow, it will start moving simply because of two factors. Number one, it's a solid company, very solid revenue growth around the world markets. And they have very attractive products, I must say. I have some of these products, and my wife bought quite a few outfits. So this is something to look at. Now, again, my approach is not buying stock. I love Lulu, but it doesn't pay any meaningful dividends. So instead, selling puts. Just selling puts. Give me your money. I will allow you to sell Lululemon. That's what I'm doing with that. Now, another situation, though, is with the software company by the name Unity, symbol U, one letter. Now, this company has quite significant credentials. You can read it all on the internet. I'm not going to reiterate that. But again, I'm very cautious even here. Although it's now around $30, $29.50 or something. But it was just a few days ago, it was 40. So, but there was overall market correction. So at this point, under 30, I think it's quite safe buy. But even then, I'm selling covered calls, just to be on the safe side.
Sasha, there's an important element of selling covered calls and cash secured puts, and that is trading fees. Trading fees add up. The more frequent the trading, the more frequent the fees. Now,
well, my fees are $3.95, and I don't even take it in consideration. I can trade all day long, and if I will pay $50 at the end of the day, it's about.
well, how do you do that? I wonder how you do that, and I wonder if you're missing out on something because the banks make a great deal on derivatives trading fees, and so we need to pay attention to that. Now, the closer the expiry date is on a selling a put or a call, is the greater the premium income percentage. But then you're trading more frequently so that these fees add up. So, for instance, if you on a Monday sell a put or a call, the expiry date on a Friday, you'll get a higher percentage return, but you will get 4 times as much in trading fees as you would if you sold once a month. And so
Um,
we need to compare. So when you tell me that it costs you $3 to sell derivatives, regardless of the size of the transaction.
there is $1 for each contract. So if I sold, okay, let's see, today, before the show, okay, I, I sold five covered calls, 29 and a half, March 10th, which is this Friday. Okay.
Uh-huh.
So I'm making profit. I haven't liquidated position yet, but I'm already making $55 profit, and I paid 350 plus 5, 850. I paid for this transaction. So far I'm in plus, but I don't care because in some of the scenarios, probably I would say 65 to 70%, these calls will expire worthless. So because this my timing is that Thursday should be okay, Friday market will go down, and so Unity software also will go down. So I'm playing for keeping these calls and let them expire worthless. So I sold each call for $78. So you multiply by 5, so it's close to $400. I paid $8 in transaction fee. So that's about where we are. And the stock now is trading at 29.40. Okay. So unless it will jump over 30, not 30, sorry, 20, 29 and a half. Okay. So it's close to 29 and a half. So in most of the scenarios, I would estimate 60%, if not 70. This about $400 will be mine to keep for my.
Transaction costs on securities are so low today that we can ignore them.
It's
Used to
true.
be a time where it was a linear sort of a thing, and the higher the cost of the transaction involved, the higher the fee. It could run into hundreds of dollars, but now it's under $10 whether you do a $10,000 transaction or $1 million transaction. Trading costs are low, except in derivatives. The banks are making a great deal of money being involved in derivatives trading.
But look, I'm not privy to banks' books and records to see and calculate how much money they're making. All I care about is that on Lululemon, I sold March 17, 317 and a half puts, collection for each put 1650. So we are talking about almost $5,000. My cost of transaction is 350 plus $36.50. So it's a no ignorable event. What's more important thing is that I sold 317 and a half puts. So I have an obligation to buy Lulu at 317 and a half, and stock is now, say, 303 and change. Okay, so now I'm on the borderline of my position is getting a little bit more riskier than I originally anticipated. However, there is still time left. There is effect of the end of the quarter reporting issue, which we discussed, and the Lululemon will report in the 20th.
Do you ever consider getting out of your situation by buying back those puts that you sold?
Not at this moment yet, because right now I'm breaking even. So why would I?
Yeah.
Remember, there is a time which I sold as well. So the time will start slowly eat into the price of the pool.
That's right.
So let's imagine that Lulu, that I'm all 100% wrong, that Lulu will not go higher, that the reporting will be not so good, and the Wall Street decided to hell with our bonuses. We will just keep, keep it the way, which hardly possible. But in that event, the time will slowly eat out into the price of this puts. So maybe even the next three. I need two positive days, and but even then I won't buy because I don't mind to be assigned on Lululemon. I just happen to like the company and its perspectives. Once I will be assigned, I will start selling covered calls. So I'm not worried about the long-term position. Although, well, let's imagine that it will go down to, I don't know, 250. Okay, so I will end up a big losing position then. But we'll see. I hope it's not going to happen. We'll see. We'll see. We'll see it very soon, as you say here. Okay. So, what are your plans for next week, Jim? You have any ideas what you're trying to do?
Well, I am going to ignore whatever Powell says today, and whatever action that the market takes in response to that. I think the market's already built it in. They expect what he's going to say, and they're probably right.
But remember, I asked you, what do you think is his salary? Him for that salary that he gets there, he must say something. And what that something is, going very well with the Wall Street, who a lot of people started buying stocks at late last year, beginning of this year. So now the Wall Street's goal is to get that stock out of you. How they can do it? Bring the stock lower, so people will start seeing red on their screen and say, "Oh, hell with that! Okay, let me sell it." Because you see, the losing position when you see red, it means that it eats into your other potentially profitable position. Because of that loser, you cannot buy something that.
Okay, I have some new data on Powell, his salary. You'll love this one. He only makes $190,000 a year, and he says that's fair. But he's been on the board of governors, and his net worth is between 20 million and 55 million. But you have to admit, he's not doing it for the salary. If he's pulling down $1.90 a year, 190,000, that's it.
Well,
I don't think they're in it for that money.
No,
I think
not for 190 grand.
No.
But he's worth about 20 to 50 million.
Yeah,
So
and so he really believes what he's going to say. I really think that we can trust that he thinks what he's going to say is accurate.
Right.
But I think his premise that tracking the job growth and wage growth, it will help tame inflation is fundamentally flawed. And I'm just going to ignore it because I know what he's going to say. The markets know what he's going to say, and I just don't believe he's accurate. I think that the job growth and wage growth is good.
Nick, but tell me, is his position is elected position or he was appointed?
Appointed.
He was appointed. So basically, all he needs to do get happy his master, whoever appointed him. Because there's nothing else that he should care about, unless he wants to quit his job. Which
That's a high pressure position, so he's not doing it for fun.
Back to his salary.
It's not for the salary; it's for the power and prestige.
Yeah,
because he's worth 20 million to 50 million.
Yeah,
so
but there's also some patriotism in there too.
You know what Mayor Bloomberg's salary was when he was mayor of New York?
It was peanuts.
$1.
$1 a year.
Yeah, but Bloomberg was worth
Couldn't do it for the money.
Billion.
So some people believe that Trump was getting $1 a year when he was president, right?
Yeah.
Trump was good at looking after Trump for sure, at the expense of the rest of us. Yeah.
Yeah.
Remember, his first foreign trip when he became president was to Saudi Arabia, where his daughter got into her charity $100 million.
His son-in-law.
Hey, Sasha, it's all about the power. I mean,
It's power.
And power eventually translates into money. Eventually. So
yes.
Chairman Powell is not doing it for the money. That's for sure.
I think there's power, and that's an easy thing to say because it's mostly true in most cases. But there's also an element of patriotism involved. Some of these people are really in it because they think that they can make a difference.
Yeah.
And Bloomberg, I think, is one example of a guy who was
right.
like that.
Yeah, I agree. And as I keep listening to Jim, I'm tempted to go into semiconductors now because since it's government supported and they're on government welfare, why shouldn't you buy into the semiconductor industry?
There are four elements that motivate us.
I know you did. I'm thinking about doing it too. Add on.
Four powerful motivators. They're probably more than four, but these four are really the most important ones. The first one is self-preservation. That's very obvious. The second one used to be appeal to the opposite sex. Now it is appeal to others. and the third one is power or money, which is the same thing really. And the fourth one is recognition. Everybody is walking around with an invisible sign over here saying, make me feel important. Those are the four motivators for all of us. And so you can take a look and see what is motivating Powell. And it has to be the last one, recognition. And he wants to make a difference. Like Bloomberg did, sure.
Yeah. Although Bloomberg really needed a debate coach. If you saw, if you saw what he did in the debate, I'm going, this guy obviously has never been in a debate before. He had the money. He could have afforded a debate coach, which he really needed to hire. But he didn't because he thought, well, I'll just wing it.
He's got the ego behind him too. And his ego said, I can do it. And he didn't.
I know he didn't. And I thought, I was going, oh, why did he hire a debate coach?
Yeah.
He didn't do it.
And he's like had a lot of practice and gotten really sharp at it, but he didn't.
Since you guys all play chess, it's like some guy walks up and says, well, I played my family before. I'm now going to play in a chess tournament, and I'll just wing it.
Yeah.
What section are you going to play in? The open section. Queen's Gambit, great movie. It's fiction. Okay. You don't go in the open section and beat 2,100 players. You go in the open section, you'll lose all your games. Period. Next. That's the reality, right, Sasha?
Absolutely.
Some person off the street saying, I'm going to go in the open section.
That's why it was a good movie.
Yeah. It was a good movie, yes.
Very.
There are a few questionable moments, but still, it's obvious only to us, to chess players who know actually how tournaments are being run, what's happening, and so on. But to general audience, I think it's a great movie.
The tournament directors were right to try to steer her to a different section.
Are we ready for a guaranteed annual income?
No. They even beta tested it in Norway, and it basically doesn't work. And I don't think it works either. What?
The guaranteed annual income needs to be just large enough for people to survive and not to be comfortable, for sure. If a system is open to abuse, it will be abused. Somebody will take advantage of it, unquestionably. But most people need to feel worthwhile. And
Milan, what planet were you born on? I mean, people, what they should do in education is educate people. Your life will be uncomfortable. Okay, it's going to be meaningless. You're going to work your butt off, and they're going to die. Okay,
life is suffering.
Okay, if you want this comfy life, become a dog. Okay, and you're okay. Then all that stuff will become true. But as a human, work your butt off. Okay, it's going to be uncomfortable. You're going to be miserable most of your life, and then you're going to die. That's just the reality of being a human being.
That's a Hobbesian theory, and it's been expressed often, Nick. But it doesn't have to be that way. Many people live. Of
course, you can be a dog. My dog has.
Many people live comfortable
in some areas in the United States, dogs are not allowed to bark.
Florida, you can't bark.
Go to Pinehurst, play golf.
Right. Yeah. So now there is a new business. People are opening private parks for dogs who want to bark. And so you pay only $5.65, and you bring your dog, and he can bark all he wants.
People make money any way they can, yes. But there are people that are still trying to support others who are less fortunate. And there are people that can ease the pain and suffering of others. And these people should be recognized as well.
Agreed.
Recognized for what?
For helping to ease the pain and suffering of others. Because life is about suffering.
That's right. That's the key. Life is about suffering. I like that. So once you figure that part out.
That's Buddha telling you that.
Philosophy,
There's a path, Nick, to the end of suffering. And that's what Buddha taught.
There's more suffering after the end of suffering. So you just get used to it.
Now there's enlightenment.
It's like being in cold water. You get used to it after a while.
So, Jim, according to you, is suffering some kind of a commodity?
No, it's a right. You have a right to suffer.
It's not the Bill of Rights, Nick.
Right? Bill of Rights. You have the right.
You have the pursuit of happiness as part of it, not the pursuit of suffering.
You have the right to complain, especially in the United States of America, and you have the right to recognize people are better off than you are, and you're not as good off as they are. And just get used to it, and then you'll be happy. You're right.
But that's if you judge things like, do I own the best car on my block? You know, and that's when your mind is just a little bit skewered.
That's Boca Raton all over again. If you ever been to Boca.
Actually, we didn't touch today the electric cars stocks.
Oh, almost.
You know what's the hottest stock right now? It's not Tesla.
It's China's. Yeah.
No. It's Ferrari.
Oh, I thought Ford was making the biggest inroads.
Ferrari now came up with some model electric cars, and there's a lineup for the next 3 years to buy it, and their stock is now flying like in the stratosphere.
Yeah. What's the price of an electric Ferrari? A gas Ferrari.
I know price of its stock, but I don't know price of its car. They don't have any dealership in Toronto area yet.
Hey, the way it works in Ferrari, if you have to ask about the price,
you can't afford it.
Absolutely right. Absolutely. It means you're not there. You just have to run away from the dealership and never.
That's another thing. It's recognition.
Even my favorite book, The Millionaire Next Door. Millionaire Next Door will not buy a Ferrari. I mean, it's just
that's right. That's right.
But Millionaire,
you got the book.
Yeah.
Let's take a look at it, baby. See it. Bring it forward to the screen. Let's get a close up. Here we go. Boom.
Monday Morning Millionaire. That's what.
The reason that book is called Monday Morning Millionaire is because many of our members make more money on a Monday morning before breakfast than they ever did during their best week at home.
It's true.
And that's possible for everybody. The number one thing is save, which is difficult for many people. People aren't saving. Without saving, nothing else matters. But it's entirely possible for people to continue in retirement at the same level of comfort that they did during their working lives if they follow the instructions in that book, which is really investing for dummies.
Mm-hmm.
Yeah.
And I also say that, when I was young, just out of college, I paid myself, my first paycheck, I paid myself before I started to pay my bills. Every paycheck, I saved something.
Everybody should do that. I met a very wealthy man in his late 70s who said that his entire life he would save 25% of his earnings, regardless of how low they were or how high they were. He would save 25%. That's excessive. There's no need.
That's a lot.
No need to save that much. The important thing about saving is to give it time. The compound interest is the eighth wonder of the world, according to Albert Einstein, but it needs time to work. And so you can't save 25% of your income, save 2% of your income, but give it time. Give it time to work and to compound. So that's critical and the most difficult for most people, because most people live paycheck to paycheck.
Yeah, that's most of the people actually.
So I'm not buying my Beyonce tickets for $400 a ticket for myself and my wife. Is that what you're saying?
You can afford it, but most people out there listening to Beyonce cannot. We were talking about previously.
Or Taylor Swift.
Yeah.
Or Taylor.
What's happening with the people like myself who can afford it, but
choose not to.
But I feel horribly challenged by listening for an hour and a half or 2 hours to her voice. With all due respect, she's by most standards, she's a great singer.
It's a question of taste.
Not for my taste. Not for my taste.
Well, I don't know whether most people would know this, but could she sing the Queen of the Night, Mozart's Queen of the Night from the Magic Flute? Not a chance.
Or even the Star Spangled Banner. That's a tough one.
And most of the people who actually can afford to see her, they're buying tickets in the first row so they can feel her perfume and her your juices and
Maybe she'll sweat on them. Yeah.
sweat and enjoy it and so on. So that's something that you cannot do it on YouTube or some other device or so. These people really must attend. So if I were one of those people, I would pay.
Well, there is an element of ecstasy attending something like that. It's a big event. The energy is tremendous, and everyone around you is super charged up. So it's an experience of a lifetime for some. And how do you put a price tag on that? But
yeah, and then they stampede out of the area after they're done. You get run over and you're killed. And it is definitely an event of your lifetime.
That's suffering, yes.
Right, yeah, which I promised everybody you get a chance.
But I want to tell you something.
We have a theme, Nick.
Yes.
What I saw on YouTube shows by Beatles on Ed Sullivan Show, Australian concert, Japanese concert, and many others, I think nothing can touch that excitement and that energy which were generated by this super group. So after that, any show, whether it's Banksy or any other artist, today, nothing to me, absolutely.
The price of being there, though, is you have to find parking. You can't have a drink. Whereas you're watching at home, you can see any performer performing anything on your large screen TV at home, and keep your feet up and have a glass of wine in your hand and not worry about driving or parking. And so there's a trade-off for sure.
Milan, but what a great pleasure that after all that suffering, you are arriving your home and you can go to lie on your bed and enjoy a nice glass of wine.
Well, I used to go to those types of things and wake up 3 days later and not in my home.
What's happened with your home? It was sold?
No. I make it back eventually. Yes.
Mentis.
You have to be young to do that.
That's true.
Absolutely. Yeah. Okay, gentlemen, I think we had a very nice program today, and we've discussed a lot of things. And this coming week will show who is right and who is not, and how the Powell, his predictions are affecting the market. And let's stay the course in any case, okay? Thank you very much. All the best to you. So have a great and successful week.
Thank you for inviting me.
Bye-bye.
Bye, guys.
Welcome. Today, we're going to look at a unique tax planning opportunity using a little known plan to create huge tax deductions for 2020. So listen up to this not well known